Okay, hello Futex traders and to the wider investment community listening in. Going to go through the weekly trading roadmap for the week starting the 16th of November 2015. So I'm currently recording this on a Monday morning. Didn't have time to record this over the weekend as I was away in Copenhagen. So first off, going to say a big thank you to the Finance Lab Society from the Copenhagen Business School that allowed myself and Imran to come over and give a good talk. It was a very good turnout, about 50, 60 people. I think we were quite happy with that turnout, and in general, very, very happy with it. We saw a lot of engagement and a lot of people coming up to us afterwards. So big thank you to Finance Lab for having us. On a second note, obviously, over the weekend, we've seen the horrific images that come out of Paris, the Paris attacks that happened late on Friday. Obviously, never something great to hear, great to see, and really quite tragic. But in any case, that's not going to be my place to comment on that. As a trading firm, we have to find a way to, trade the flow that's coming into the market, and there will be flow just because of this event, and we already have seen a lot of flow just on Monday morning. So the first thing that I'm going to open up and say, obviously from the roadmap that we're going through with regards to the event-driven risks of the week, is obviously Monday we were expecting a lot of the flow to come into the market from the Paris attack. So we hadn't seen any of the reactions because the markets were already closed. And this morning, obviously, we've seen quite substantial gap open. So we've seen gap down in equities, European equities. We've seen a gap up in bonds. But for the most part, equities have pretty much rallied in a straight line. Bonds have come off since they've opened. So that's generally where we're sitting at the minute. Also, Monday we had the European CPIs, which came out their final. They were in line or slightly higher than expected. We also have the U.S. Empire Manufacturing's coming out, and the ECB's Constantia is also speaking on Monday. So overall, because of that, because of the flow we're likely to see from the reaction of the Paris attacks, I put a high relevance on that, about 20% risk allocation. Do note, though, with the fact that we've actually had this occurrence, the market and in general the public, the media is going to be very vigilant and is going to be very jittery to any sort of rumors regarding any other potential terrorist attacks, which is something we wouldn't want to see. But in the case that we do get any sort of rumors or something does happen, stay at your desk and be prepared, because in these sort of situations, potentially we might see false alarms, which could move the markets. You'd expect your core bonds to rally on that. You expect equities to sell off on that. So do, be vigilant. Stay close to your Twitter. Obviously, there will be rumors, but, try and see and, fizz out the ones that are not really substantiated, and then potentially we might get some moves over something that could be real or not. In any case, that's just one note I wanted to just put out there and keep in the corner of your eye for the rest of the week. So moving on to Tuesday with the UK CPIs, RPIs, and PPIs, quite an important figure. Overall, German ZU and the US CPI, which for me is a very big indication now and strong data point to see whether the Fed is actually going to look to raise rates in December or not. Obviously, we've had a very decent jobs number. The NFP was very, very, quite high. And now we're looking to see, do we have any sort of inflation? If we get anything that's higher than expected, I think, those generally inflation expectations might bid up a little bit, and on the back of that, we might see a slightly higher probability of a rate hike. So currently where we're standing, the probability of a rate hike for December currently sits at 70%. So that's where we're currently sitting, a 70% chance of a rate hike in December, according to the Fed Fund futures. So you can look that up even online. I think there's a Fed Watch that calculates that for you guys. But in any case, that is our current market pricing. So do stay tuned to that market pricing. Obviously, anything that shows that we might not get potential rate hike in December. For whatever reason, we get a much lower than expected CPI. You expect this to fall, and with it, you'd expect bonds to rally. So bonds to bid on that if we do get something that shows a much lower than expected CPI. We also have the U.S. industrial productions, ECB's Lautenschlager, and the Fed's Ruler speaking on Tuesday. So overall, because of the CPI, I've given myself a little bit more risk allocation with that high relevance of the data point. Wednesday, we've got the building permits in the U.S. and housing starts. ECB's merged, Fed's Dudley, Mester, Lockhart, and Kaplan. So pretty strong, I'd say, event-driven risk from the aspect of actual speakers. So medium risk allocation on that, and 15% risk allocation for that day. UK retail sales ex petrol, pretty strong, pretty big figure for the UK. US Philly Fed leading index, ECB's Pred and Fed's Lockhart all speaking on Thursday. Again, 15% risk allocation for that day. German PPI's European consumer confidence, and the ECB's Draghi speaking also on Friday. So do stay, prepared for any sort of comments out of the ECB's Draghi. The closer we're getting to the ECB meeting, where we potentially might see some sort of action, if we do get any sort of action, Draghi might come out and say something in advance to prep the market for it. Any sort of comments on, they're looking at corporate bonds, for example. If they say corporate bonds, you'd expect equities to absolutely ramp on that. Bonds, on the other case, let's say the Bund, potentially might even be a very good sell straight from the get-go. You might see a bit of a knee-jerk reaction up, but I'd be willing to sell into that because, from a risk allocation portfolio management perspective, you're probably going to see funds trying to shift their money out of core assets into more corporate bonds and equities. So that could be a potential play if we see that sort of comment. I think a very big comment that a lot of the traders on the floor already kind of prepped for anyway. But in any case, be prepared for any sort of comments from Draghi. High relevance on that day, and a 25% risk allocation overall. So let's take a look at the Bund futures and the Euro Stoxx for you guys. See how they've panned out so far this week and what we're looking at on the weekly metrics. So if we just put this into perspective, obviously the market had a pretty big move to the downside, as you can see, 2 weeks ago. So this is our really big move to the downside. We took out that really key area that we spoke about between 71s to about 83s. So 71s to about 83s was our zone. It was our really key zone. We said below here we were probably going to get stops, and lo and behold, as we did get below that area, we saw quite a nice little move below there, closed below that really key area. Obviously, this was a lot to do with the non-farm payrolls number. Come Monday of last week, we couldn't hold an offer to the downside, came back inside the range of the previous week, and rallied. Now, the key point really was once we got through those 71s again. So, as the market came back above these 155.71s, again, this region in here, once we started bidding above that and started holding value above that, that was an indication that we were going to at least test the value area low of that previous week at 156.23s. Got above that, created a VPOC at 156.33s inside that value area, tested the other side as well at 156.84s, and closed above it. With the news over the weekend, the reaction we've seen so far is the market's opened up higher, actually gapped higher around here. We had a small move up, and now it's been sold into. We've actually come and closed that gap here, and actually started trading back into last week's value area high at 156.99. So with that, obviously with this kind of market structure, if the market can hold below these 156.99s and use that as resistance here, as we're seeing, we're trying to make a move to the downside. Likely if we can hold an offer, we're probably going to rotate and try and test these 156.33s. This whole area, however, even though I'd like to think that if we're holding below this, inside this value area, we'd probably like to try and test these 155.77s. But I will say there's been a significant amount of auctioning in this area two weekly VPOCs, really strong, thick area. So really, I think the market's going to need to do a lot of work really to take us down to this region in here. So from that perspective, I mean, in the short term, if we can hold that offer below here, and especially below these 156.84s, that previous value area high of that week, we're probably looking like we're going to test this VPOC down here. However, like I said, it's probably going to need quite a bit of work to try and get through that. So do bear that in mind. This area for me would still be a pretty decent buy, first touch when we get down there. Obviously, it's down to your price action reading skills to see whether there's actually any buying at that area at all when we get there. If we don't see it and we can see that the sellers are trying to step in mass, well, really, you don't really want to be standing in the way of that. But do just bear that in mind. That's currently the market structure we have in the Bund. Obviously, a different scenario altogether is, and we'd like to highlight, if we cannot hold below these 156.899. So for whatever reason, let's say we close back above, we start using that area as support, we're probably likely to see a rotation. We'd have to take out this high, obviously, and start building value above the open, but we'd likely see a rotation to take out this high of the week, which I believe, let's see, it comes in. Let's try and move this level. That level comes in at 157.43s. And through there, obviously, I'd probably see, not only to take this out, I'd probably be looking for this to test the VPOC of this week here at 157.60s. Through there, we're looking at probably a slightly elongated move, which would probably take us to the value area high of this week. As you can see, comes in at 158.13s, just marked right here that I just marked in. So really, two key scenarios, obviously, for the downside and the upside. You're looking at your key pivot point right here, value area high of the previous week, which is a good pivot point to have because we've opened outside of balance. So really, you want to see how the market's interacting where balance is perceived by the market. So I think some good areas, some good things to pay attention to. Let's hope we get some good opportunity in the week ahead in the Bunds. Let's take a look over at the Euro Stoxx now to see what we're looking at from the market perspective. So from a weekly metric perspective, we had last week's value area high at 34.60. Last week's value area low at 33.83s, which I think could come into play quite soon. With regards to the reaction that we saw from the news we had over the weekend, the market opened up significantly lower down here. In fact, had a pretty big gap from, last week's low, which you can see comes in around here. Let's just try and, I think we need to get rid of another level so I can mark this one. So that comes in around 33.23s, I believe. So that was last week's low. So that's really where some market participants were potentially looking to sell, but we opened up in a very key area, guys. Let's just remember, put it into perspective where we opened. We opened up just ahead of this huge zone. You can see the market had left multiple highs in here. I think we mentioned this level. I had this marked for a while at 32.84s. Multiple highs, high of the week here, high of the week here. This was actually an inside week high, which we false broke, came and tested it again. So really, really big level, these 32.84s. And really, you could see the reaction that we've had over that, from that level this morning. The market's come down just, about 10 ticks or less, found that area of support and just completely straight lined off of it. Came and tested the weekly lows of last week. We breached back inside, and you can see again straight line move. Now we're finding value. This is now where we're trying to find some value. The next move obviously is going to be quite important. I'd say from a scenario perspective, now we've got a pretty significant, so this is a pretty significant buying tail. We know that the buyers in this area, and for the bulls, you basically want this market to hold this tail together. And if we can hold that tail together, we're probably going to try and breach higher. The first area that we're going to be looking at, obviously, like we said, is 33.83s. this area, if we can get back above here and start holding that as support, that's where we could potentially be looking for a much larger move to test these 3,446 or 3,446 VPOC of last week, and the value area high at, as we said before, 3,460. Now that's scenario one. Obviously, scenario two, just the contrary to that, is if we test this area, cannot hold above it, use that as resistance and potentially come off. So that is also an area I'm looking at. Very big area for me. We've got these. It was the previous value area low just ahead of that area. We also had a single prints in that area. We had this daily low just above there. So really, this whole zone, this whole area in here, for me, could act as a very strong just interim resistance, really. So let's just keep an eye on this area, because if we get a reaction, we might see a move back down to potentially fill in some of these single prints that we've left already in the week so far. Now this is obviously the more bullish scenario. This scenario 2 is a more bearish scenario. I'd say scenario 2, if that's scenario 2A, scenario 2B, let's just clear this up a little bit. Scenario 2B potentially is a scenario in which we come off and actually get below last week's low at 33.23s and start filling in some of this area. Now that would be particularly bad for the bulls, because if we fill in this buying tail, then we're looking potentially like we could breach and test this really thick area at 32.67s. If we can breach below these 67s in here, that is looking very, very, very bearish. There's obviously some significant flows that's coming into the market for us to reverse all of this flow, and then if we can hold below this, really, then we're looking at possibly a very big down week, because like I said, we're getting back into regions, these really thick areas, areas that we've auctioned off quite well, so we can really rotate all the way down into these areas in here quite quickly. So do bear in mind, there's a couple of nice little scenarios in the Euro Stoxx. Again, we've had an open outside of balance, so do bear in mind that the weekly value areas are the areas in which you want to be paying attention to. And like I said, these 32.84s, huge level. Do bear it in mind for the week ahead. Alright, great. So that's pretty much what I wanted to go through for this week. I'm also doing actually doing a FX stream at 12 o'clock today on Monday. Do stay tuned for that if you guys are around. Price ladder stream I'm doing tomorrow as well, and as per usual, the weekly market wrap at the end of the week. So do stay tuned, have a profitable week, and let's keep in touch on Twitter. My Twitter handle, if you guys would like to follow me, is at MVS_Futex live. So if you have any questions, anything you want to discuss, just hit me up on this. We can have a bit of a discussion on Twitter. Alright guys, take it easy, and bye bye for now.